Welcome to My Money, Your Money, a weekly talk show on generational wealth, wealth management, and personal finance. Now introducing our host, Brigette Lumpkins.
Hello, beautiful people, and welcome to My Money, Your Money, where we talk about all things money with the goal of closing the racial wealth gap. I'm your host, Brigette Lumpkins. I earned an MBA from Wharton and have worked at such firms as Goldman Sachs and Lehman Brothers, covering both institutional and private clients and raising capital for investment funds. I'm so excited to welcome our guest, Rodney Herenton, today. Rodney is the founder of Channing Capital Management, an asset manager with $4 billion in assets under management, headquartered in Chicago with offices in Atlanta and South Florida and maybe some other places. Rodney, thank you so much for joining us. Welcome to the show.
Thank you for having me.
It's a pleasure. It's a pleasure. So I deliberately left your intro brief because I think that you're probably the best suited person to talk about yourself. And today, our goal really is to talk about what you do, talk about your firm and how it fits into our broader financial ecosystem to help educate our viewers, not only in like how their money is invested on their behalf by the professionals, but also potential career options for some of our younger viewers. So, can you tell us more about yourself and then what about Channing Capital Management and sort of what it does?
Absolutely. I'm a graduate of Morehouse College, where I focused on finance and banking. Started my career off at Citicorp, and then decided to go back and get an MBA at Harvard Business School, and came back to Wall Street, where I really wanted to focus on developing skills on how to do transactions, and ultimately launch my own firm, which I'm sure we'll get into.
So again, like our audience is not an audience of finance experts. What is a transaction in the context that you're describing it? Can you explain what a transaction is for our viewers?
Absolutely. When I first graduated Morehouse College, I was an analyst. So at Citicorp, which was a major money center bank in New York, we would provide a lot of the senior loans on top of mergers and acquisitions or big refinancings. So if you think about your home, where you go to the bank, you get a mortgage loan, they're actually underwriting that mortgage for you. Well, at Citicorp, I was underwriting large corporate debt transactions to allow major corporations to access to conduct business.
Okay, and you said senior debt in there somewhere. What is senior debt? What does that mean?
If you think about a balance sheet or a structure in terms of who has first lien on your assets, it's the senior creditors that have the most secure position on the balance sheet. They can tie up all the assets and all the clean assets first as first priority.
So in other words, when you borrow money to buy something that you don't have all the money at once to buy, like a house, that's the repo man who's first in line.
Yes, yes, that's a good way to look at it. Yes, good way
So the most senior debt is the first in line repo man, and then it goes on from there.
yes.
Okay, all right. I like it. I like it.
Great, great analogy.
So I'm big on analogies. It's how I learned how to understand things. I feel like it's helpful. So you're an investment banker in New York City, Harvard MBA. That's hot stuff, right? Especially as a brother. So tell us about that and how you ended up working for yourself if you had such a great, sort of job on Wall Street.
Yeah, I always aspired to start my own business, but first I encourage those who want to pursue finance to learn your trade, learn from others, the larger firms. I heard about your background. Congratulations. As you
Yeah.
know, it's a very tough ride for Black and Brown people on Wall Street, particularly women.
Mhm.
So congrats on that. But my journey was just to get in and learn as much as I could, and ultimately, I worked for four different firms: Citicorp, Lehman Brothers, Bear Stearns, and my last experience I actually went back to my hometown in Memphis and joined
Okay.
Morgan Keegan. It was a regional
Okay.
investment banking firm. I co-headed
Mhm.
their consumer products group, where I did about 60 IPOs, and then
Mhm.
my boss sold the company. And when he sold Morgan Keegan to Regions Bank, he became the second largest shareholder. He made well over 300 million. And that's when I
Mhm.
knew it's time for me to start my own firm. While I was getting compensated nicely, I
Yeah.
didn't have ownership. So uh,
Right.
as part of the theme of your show, creating generational wealth, I
That's
knew
right.
then I didn't want to just be comfortable. I wanted to start my own firm.
Well, I mean, of course, your firm isn't new. You've been around over 20 years, and that's quite an accomplishment for any firm on Wall Street, really. I mean, even the long-standing firms, sometimes go away or
Yeah.
get transacted away, bought or sold or whatever. And so, can you tell us about those early days? Because I have in one of my activities, actually advise first time underrepresented asset managers like you were back when you
Yeah.
started Channing, and I help them with strategy. And so I have a bird's eye view into how hard it is to start any business, let alone a business in a field where we are so few and far between. And it's hard for startups to get off the ground, regardless of your identity.
Yeah, absolutely. Alan Morgan, the chairman and CEO at the time at Morgan Keegan, when we launched, it was important for me not to launch and start from zero. So he took us to the board level of Regions, Morgan Keegan, and they approved us for a $70 million allocation.
Oh,
So one
wow.
advice is to try to find a strategic partner where you don't have to struggle to get to 70 million in 10 years. We started out of the gate. So from 70 million, me and my business partners continue to grind and hustle to continue to grow the assets from 70 million to 100 to 250 million to 500, and just kept improving the performance, adding products along the way, and hiring talent. That was key to bringing on good people that can help execute.
So, how big is your firm today in terms
We have about 28 employees on
of?
the
Okay.
investment team. Everyone's has the CFA credential, as you know, is a
Mhm.
very important designation if you're on the asset management side. So everyone on the investment team has that designation, and we try to hire talent that has acquired their MBAs and have prior experience because we're competing against everyone. We're a
That's right.
boutique firm, but we're going against all the major firms that you can speak of.
Right. Well, I mean, the wisdom that's growing out there, but not always followed by investors, institutional investors, limited partners, or LPs, as we call them in the asset management business. LPs don't always follow this, but everybody talks about how not only quote minority owned firms have better performance and women owned firms, but also boutique or smaller firms tend to have better performance too. And so you would think that you'd have an advantage raising capital, but I know that's a whole other story.
Yeah, yeah. It's been a challenge, but we found that if you hire the right people and you stick with your strategy and you execute consistently, those barriers will come down.
Right. And so I want to double click on what you said earlier because I don't know if a lot of people know what the CFA is. And so I think this really plays into themes of how we as Black people can get access to these really wealth generation employment opportunities, whether we follow your model, which is to learn the business really well by working for however many years in major corporations and making contacts and then launching on their own, or they choose another path. But in order for you to have access to that, I mean, you went to Harvard before you founded Channing, right? And that's probably contributed to you getting that big anchor investment in the beginning. So let's talk a little bit about what is the CFA designation and why would you, especially as a Black, do Black people need to get an MBA from a place like Harvard and a CFA to be
Yeah.
successful in this business?
Let's start with the MBA. Obviously, there's a cost,
Mhm.
and I encourage anyone if apply to 10 schools and three are the top three, and the other ones are good regional schools. I mean, pick the best one that fits your appetite. For me, that was my dream school. That was the only
Mhm.
school I applied to. I spent
Mhm.
2 years preparing for my application, and I
Mhm.
involved a lot of alumni in my process. But not everyone's given that opportunity. So
Right.
really, an MBA, I would just use an MBA. You definitely want to figure out what career you want to enter into and find the best MBA program that can get you into that
Mhm.
career. If Harvard's the one, great. If it's University of Miami, if it's University of Chicago, Wharton, designate your interest where it can most propel your career.
Mhm. And
And
then
as
what
far as
about
the
the CFA?
CFA,
Yeah.
the Certified Financial Analyst Certification, it's a designation that is a very challenging but rewarding and very prestigious designation.
Mhm.
You have three levels. CFA has level 1, 2, and 3. So it could take up to 5 years to get that designation. And the pass-fail rate, the fail rate is high, the pass rate is low.
That's
So I
right.
encourage anyone, if you really want to be an investor on the buy side, that's typically the track you take. Now, I came from investment banking where I took the Series 7. I took a lot of principal exams to be a manager in my groups, but I didn't take the CFA because I knew I wasn't going to go the track of actually investing and picking the stocks. That's what my partner does and the teammates that he has on the investment team. What I do is I focus on product development, strategic direction, and growth of the firm.
Right. So let's talk a little bit about what the firm actually does. Right. And you mentioned the buy side, and we've said asset manager,
Yes,
and that has an intuitive meaning, but what does it really mean? What do you do? What do you and your team do every day for clients that um, inspires them to entrust you with money to manage on their
absolutely.
behalf or
Um,
invest on their behalf? Because when we say manage, we mean invest. And so, what do you do on a daily basis that they compensate you for, and why is it so lucrative? How do you manage 4 billion with only 28 people? Because this is one of the things I like about the asset management model is the scalability of it.
Absolutely. First of all, let me define what we do. We provide investment management services to pension funds, endowments, foundations, and unions. By that, I mean, if you have a police officer or fireman that works for a municipality, they have a retirement plan. And
Mhm.
usually that city or municipality is hiring an external manager like me, like Channing, to manage a portion of those assets. And we are a part of a diversified portfolio. Our sleeve is the public equity sleeve of
So the
publicly
stock
traded
market.
companies that are, mid-sized companies. They can be smaller companies or the mega cap companies. So we find our niche by calling on those municipalities and pitching them that we have a great product for that particular sleeve of their entire portfolio. We do not manage the entire portfolio. So if you have the city of Memphis, a recently acquired account of ours, $2 billion pension fund, we just
Mhm.
were awarded a $15 million allocation within their international developed strategy. That's what we'll be doing for that mandate.
So what that specifically means is you will be on their behalf buying and selling and holding or whatever stocks, publicly traded companies outside of the US, like
International developed companies,
international.
more developed companies, higher quality, but more developed countries. And we will have certain guidelines. They'll tell us we can't have more than 5% invested in one particular stock. We must be benchmarked against a particular index. So it's everything's about risk management. We're trying to generate a return, but at a reasonable risk. So we're one of many managers that are pitching our services that we can generate an above average return, but also manage risk. And we
Okay,
should do that in our daily lives when we're investing. You shouldn't put
that's
all your
right.
eggs in one basket. So the
That's
same
right.
discipline we have as an institutional firm, I would encourage individuals to do the same.
That's right. That is right. And even though we don't offer specific investment advice, that is a great guiding principle, which is you don't want to have all of your eggs in one basket, all of your money in one place, and tie up all your liquid cash in one asset
Absolutely.
necessarily. Okay, that's great. Now we are going to take a break to pay the bills. So please so please stay with us, and we will be right back to talk more with Rodney from Channing Capital Management.
I grew up down here in South Florida, so for me, it's a little bit more personal.
For the Mesman and Dover Law Firm, it's about community.
For us, South Florida's our home. You all are our people.
Our family, our future.
The difference we'll make for you, your loved ones, your kids, matters, because to us, it's personal.
If you need us, call us 24/7 at 866-954-MORE.
That's 866-954-6673. DeMesman and Dover Law Firm, youraccidentattorneys.com.
At DRT Behavioral Services, we provide culturally sensitive mental health evaluations with thorough treatment plans, incorporating alternative forms of wellness, not just Western traditional medicine. Besides medication management and psychotherapy, we provide education to people in the areas of minority mental health with classes on your diet's impact on mood and sleep hygiene for better rest. We also offer weight loss therapy, massages, and facials. Visit brainlovehelp.com today.
Quality care is a priority.
Thank you for staying with us. And thank you for being with us again, Rodney. And we talked a little bit about what it is you do. And now I'm curious to know, especially you said you're from Memphis. Memphis is a long way away from Wall Street. So can you tell us a little bit, because, we as Black folks, my parents don't know what I do. When I was on the institutional trading floor at Lehman Brothers and it went bankrupt, for all my mother knew, I was a bank teller. So tell us about how you got exposure to this business and how you had the sense to go to great schools such as Morehouse and Harvard and land at Citigroup. That is not a typical path for most young Black men.
Yeah. Well, I'm gonna be honest now. I was in Memphis during the summer. My dad had someone he wanted me to meet, a gentleman that was from Memphis, much older than me, but he happened to be doing a deal in Memphis. He was selling a business that at the time, Kidder Peabody was a very prestigious investment banking firm on Wall Street that's no longer around. But so my dad said, "Hey, I want you to meet somebody who's going to call you and come by the house." Well, when my parents were out of town, I was having a party that weekend. And the gentleman did call. I told him to stop by. And he actually worked at Kidder Peabody. And he came into my party. He stayed a little bit. And he handed me his card. He said, "Are you going to be in New York any this summer before you go back to school for your sophomore year at Morehouse?" I said, "Yes, I'm going to be visiting my roommate who's from Mount Vernon, New York." So I followed up when I was in New York. I actually went to visit him at Kidder Peabody, and I didn't know what he did. But when I walked in that building and saw that plush wood and all the elaborate office space, and I went to his office and saw that trading desk and all of that, I told him, "I don't know what you do, but whatever it is, I want to do it." And
Right.
that's what started my interest in Wall Street.
Right. Well, the first time I walked on a trading floor, I was hooked. First of all, I was like, this is
Yeah.
like Vegas, right?
It is just, I mean, the energy and
Intoxicating.
the noise and the excitement and the competitiveness.
Right.
I figured since I wasn't good enough to be a professional athlete, let me make this my competitive spirit of doing well on Wall Street and rising and becoming successful. So that's what I've been thriving to do since.
That's right. I think that finance is not a traditional career that high achievers in our community get pushed into, but it's so rewarding in terms of the constant stimulation. I haven't been aboard for one day since I landed in Philadelphia to go to business school and embarked upon this finance career. And I think that if you have a really active mind, it's a great career. So you visited your father's friend at Kidder Peabody and you went back to Morehouse to finish your degree. Did you end up doing an internship there the following year? How did it actually play out that you ended up as an investment banker at Citi?
Back then, diversity, we didn't have the terms DEI or all the buzzwords you hear today, ESG. It was simply, we were trying to knock down doors. So my internship, I had to take what I could get. I ended up working at First Chicago in the audit department. Not a very exciting area, but I said, I'm going to get my feet in the door and learn the other areas of the bank through networking. So I did get a job offer to come back, but I used that offer to leverage and interview with other banks. And ultimately, that's how I got a job offer with Citicorp. And that was on the traditional commercial banking, but I used that to at least get in the industry. And obviously, I had to make the switch and attend Harvard to come back and join the investment banking side of the business on Wall Street. So it was a long journey, but I did have a plan.
Right. Well, I mean, I think that's a great insight, right? Because, everybody doesn't get that grand slam home run sort of plum dream job at first. But first of all, you can learn a lot along the way. And second of all, there are different levers, like going back to school for an
Yeah.
MBA, where you
Yeah.
can reset or redirect. And also, I think ultimately knowing more aspects of the business is advantageous over time versus fewer aspects. So, we all know people who all they know is investment banking and their perspective is a little skewed, right?
Yeah. Agree. Agree.
So let's talk a little bit about your experience, because I was talking to someone today who said, well, this is why I don't want to go into XYZ field because I'll be the only one, et cetera. And what are your thoughts on that as a professional, a young person coming up? I don't know how many Black folks were in your class as a new investment banker coming out of Harvard, but I bet there were few of you. So what was that experience like? And did anything about that experience inspire you to work for yourself aside from the upside and the reward?
Yeah. My class going into Lehman Brothers, I think it was probably of all the MBAs that got into that entry program, there were probably 10 African Americans out of, you know, 60 or 70.
Oh,
So
that's huge. That's a ton.
well, that was a big year. I know Harvard alumni came to campus and they were very determined to find
Mhm.
diversity. And I know they hired 3 of us
Okay.
from Harvard alone. So out of that
Okay.
number, 3 were from HBS. So that was a big push. That was, I'm telling my age, but that was in 93.
Uh-huh.
And so you saw that trend begin to increase around that time. So I used that opportunity to work at Lehman Brothers.
Mhm.
Lehman Brothers was it was a changing organization. At the time, it was owned by Amex, American Express, then American Express
Oh,
got
yeah,
about 5
Shearson,
of them.
Lehman,
We
and all
went through
that.
some Shearson, Lehman, Amex, went through a lot of iterations. So it was a tough environment. You had to find the right mentors and the right group because they did have years of turnover. And then from there, I leveraged that opportunity to work at Bear Stearns in the LA office. That was an alumni of Harvard who started that office. So I leveraged, again, the network with an
Mhm.
MBA and ended up joining that team where I worked for 3 years before moving back to Memphis and betting on myself. Um, married, had our first child, and wanted to give back to Memphis. My dad had become the first elected Black mayor of Memphis. So I wanted to
Wow.
experience some of his legacy. So I ended
Wow.
up moving back to Memphis. And that was a great move because ultimately it allowed me to start my own firm.
That's amazing. That's amazing. That's an amazing legacy to follow, right?
Yeah,
So,
but the key is you got to bet on yourself. A lot of
mhm.
people thought I was crazy. You're leaving Bear Stearns, LA, to go to Memphis. So,
Right.
I mean, yeah. So it was not easy, but it was the best decision I made. And I don't think I would be running my own company if I didn't take that bet on myself.
That's right. And I think that there is a time, especially if you have entrepreneurial aspirations, when you're working for, and this is in any industry, a big company, to know like when you have learned enough and made enough contacts and it's time to step out on your own. Because if you wait too long,
Yeah.
your window
Yeah.
will close. It's never too late, but there are optimal times to start something, and you have to have a
Yeah.
lot of courage and self-belief
It
to
was tough. It
do
was,
that.
the meals were not 5-star. Let's just say that.
You ate a lot of beans and
It
ramen
was
or
worth it.
whatever.
And
Beans, ramen, peanut butter, those are my go-tos when I feel
yeah.
I
So I
still
was
go
I
to
was
for
I was
comfort.
35 when I branched out. Yeah.
Right, and with a young family. So we're pretty much out of time. This has
Oh
been a great
no, we could go
educational
on.
conversation.
Okay.
I know. But any parting words? I mean, I think that you're such an inspiration. There are just a handful of Black people who have started asset management firms. Maybe there are a dozen in the ecosystem. People like you who have been really successful and built firms that are employing Black people, creating wealth for yourselves and your families, on behalf of your investors, on behalf of your employees. So really kudos to you. If anyone
Thank you.
has aspirations to do what you're doing, what would be your parting words of wisdom to them?
Yeah. I think the relationships and networking is critical. I wouldn't be where I am today if it weren't for just the people that I developed strong relationships with that I made money for. to build the credibility. And when I was at Morgan Keegan, I did a great job. I made my clients money. I made the firm money. So it was an easier process to go to my boss at the time. And then I always catch people on a great day. Don't go ask for something on a bad day or bad time, and be
I
patient.
like that.
I caught him when he made about 250 million personally, became the second largest shareholder of Regions Bank. And then I put on his conscience to have a legacy that you brought a diverse firm along. And so he can always be proud of that, Channing's success is part of his legacy, because he could have said no. Figure out what the hurdles are up front so you can kind of go in and counter those hurdles. Like we took the worst mutual fund that Regions Bank had. We took that over, the 70 million one. It was the worst fund. And we said, we can't do any worse than that. And actually we turned it around.
That's right. That is a great note to end on. And Rodney, thank you so much. It's been such a pleasure. Hope to see you when I'm in Chicago and when you're in Miami.
Yes.
And yes. And to our audience, thank you so much for joining us today. Let's continue to work together to close that gap.